one invest amid the current market dynamics. Sébastien iorio joins me right now in the studio to discuss. Sébastien, welcome.
Thanks for having me.
Now you join us from PBS Investments, and we're going to be looking at this, a kind of overall of the assets of the market. Now, some analysts believe that US equity markets may be close to topping out, but there's also volatility coming out as well as outflow from high yield credit. With that in mind, to your point of view, what sort of areas are performing well and which areas should investors be a little bit more cautious of?
Yes, so in fact, all assets are doing quite well this year, but this doesn't mean that everything's been rosy. If we look at maximum drawdowns, meaning peak to trough declines, we see that there's been sharp periods of pullbacks in the markets. We think, therefore, that in terms of opportunities, one has to be careful and choose investments that fit well in the current trends. For example, US large cap value stocks offer still some good value. We also think that there is still some re-rating potential to capture outside of the US, most notably in emerging markets, as well as European large cap stocks. And if we look at, on the other side, to the more cautious, or should I say, risky investments, we believe that at the moment, betting on a continued decline in precious metals is still a good trade. And in fact, commodities in general might be experiencing a prolonged period of mean reversion. So outside of that, we'll be quite careful about holding US growth stocks as well as high yield. To wrap up, I'd say in general that dispersion in performance across asset class is quite low. However, it is quite high within asset classes. And this, we believe, provides good opportunities for active management.
Okay. Now you mentioned sort of commodities and a few different things there. This idea of cross-asset allocation is, given the current economic climate, is this something which is gathering momentum, which is garnering more interest from investors, would you say?
Absolutely. Investing is changing. Flows right now are shifting into strategies which are able to move across asset classes. If you look at the performance of the market so far this year, we've talked about sharp pullbacks. You see the limits of static strategies like buy and hold. So really, we think that the current environment warrants strategies that are flexible and diversified, and actually allow an investor to find a certain level of carry or growth or real return in a low-yielding environment.
So it's true, you have to have a strategy. The PBS Smart Portfolio is something which you guys are offering. What would you say sets this apart from other strategies which are out there?
So the big idea is that large drawdowns and high volatility matter. Focusing on return targets misses the damage to performance caused by large drawdowns and high volatility. While the industry tends to chase performance, we chose to focus on capital preservation. So that means that instead of trying to outpick the market, we have a process that rests on three pillars. It is disciplined. We believe that a systematic approach eliminates emotions from the investment process. It is dynamic because we want to limit exposure to downtrends and significant market corrections. And it is diversified because we want to be able to access traditional as well as alternative sources of return. So really, in effect, this is a strategy that offers investors a robust process, as can be seen from the performance. And I think the value proposition is easily understandable. This is a strategy that uses a systematic process. Therefore, it eliminates emotions from the investment process. This is a big differentiator, especially in the multi-asset universe. Now, investor can use the Smart as a turnkey wealth management solution they can also use the smart as a complement to their own portfolio construction process. And finally, some investors tend to use the smart as an alternative to absolute return, thanks to the strategy's nice asymmetric risk-return profile. So to wrap up, I'd say steadily compounding positive returns while avoiding large drawdowns is probably not the most exciting thing to hear, but is the best way we know to build wealth over the long term.
Well, if investment is changing, then of course it makes sense to invest smartly. Sébastien, thank you so much for coming in and sharing your insights with us, though. It's been a pleasure.
Thanks to you.
Thank you. Okay, well that's all from Sébastien and myself for the moment, but make sure you keep clicking back to Dukascopy TV for many more exclusive interviews and of course the hourly updates. Goodbye for now.